You are watching The Whale Flow, where we don't chase speculation, we study how capital moves. In this episode, we enter one of the most transformative frontiers of modern finance, RWA, real-world assets. The bridge between traditional finance and blockchain, and the mechanism that may finally anchor crypto to tangible economic value. For years, the crypto market has been criticized as an isolated system, a digital economy detached from the real world. Tokens, protocols, and yields existed in a closed loop, circulating value internally but rarely connecting to productive assets. It was an experimental laboratory of finance, fast, creative, but floating. RWA changes that. It is the process of bringing real-world financial instruments, such as bonds, equities, real estate, and commodities, onto the blockchain. It's where crypto stops being self-referential and starts integrating with the global financial system. To understand the scale of this, we need to remember what tokenization truly means. When you tokenize an asset, you transform its ownership rights into a digital token recorded on a blockchain. That token can represent anything: a share of property, a portion of a bond, or a single unit of gold. It can be divided, traded 24/7, and transferred globally with minimal friction. In other words, tokenization turns illiquid, expensive, and bureaucratic assets into liquid, efficient, and programmable capital. The potential impact is enormous. The global market for real-world assets exceeds $800 trillion. If even a small percentage of that moves on-chain, the size of the crypto economy could multiply several times over. But this is not just about numbers. It's about architecture, merging two financial worlds that have evolved separately for decades. Traditional finance, or TradFi, operates through intermediaries, banks, custodians, clearinghouses, and regulators. Blockchain, in contrast, operates through code, transparent, automated, and borderless. RWA bridges these two systems. It doesn't replace TradFi, it upgrades it. It takes the instruments we already understand, treasury bills, corporate debt, real estate funds, and places them inside a transparent, programmable infrastructure. The result is compliance meeting efficiency, stability meeting innovation. Let's look at how this works in practice. Suppose a financial institution holds a portfolio of US Treasury bonds. Normally, those assets generate yield but are slow to move and hard to fractionalize. Through tokenization, each bond or a portion of it can be represented as an on-chain token. Investors from anywhere in the world can buy fractions of those tokens, receive yield automatically through smart contracts, and trade them instantly on secondary markets. Settlement takes seconds instead of days. Reporting is transparent, continuous, and verifiable on-chain. Projects like Ondo Finance, Maple Finance, Centrifuge, and MakerDAO are already pioneering this integration. MakerDAO, for example, allocates part of its reserves into tokenized treasury assets to stabilize DAI, its decentralized stable coin. Ondo and Maple bring institutional-grade loans and bonds to DeFi platforms, allowing on-chain investors to access real-world yield. In doing so, they don't just create new products, they redefine what liquidity means. For the first time, blockchain isn't just a place for speculative returns, it's a place for real economic productivity. RWA also changes the relationship between risk and trust. In traditional finance, trust depends on institutions. In crypto, it depends on transparency. Tokenized assets combine both. The underlying bonds or real estate still exist in the real world, but their proof of ownership, performance, and yield distribution happen on-chain. Investors don't have to rely solely on quarterly reports or custodians. They can verify holdings and performance directly in real time. This fusion of auditability and automation is the foundation of what some call hybrid finance, the future of regulated DeFi. But the integration of RWA is not without challenges. Legal frameworks vary by country. Not every jurisdiction recognizes tokenized ownership as legally binding. Custody of the underlying assets must be handled by trusted institutions, and the line between decentralization and regulation becomes increasingly complex. Yet these are not roadblocks, they are growing pains. Every technological revolution must learn to coexist with the system it disrupts. The driving force behind this transformation is simple: yield. In a world of rising interest rates, institutional investors are searching for stable, transparent ways to earn returns. DeFi offers automation, but not yet enough real collateral. RWA brings that missing piece. By blending blockchain infrastructure with traditional instruments, We unlock a new class of yield-bearing digital assets, ones backed by real productivity instead of speculative momentum. From a macro perspective, this is where the next major capital cycle is forming. The first wave of crypto growth was driven by narrative, Bitcoin as digital gold, Ethereum as programmable money. The next wave will be driven by integration, blockchain as the settlement layer for real assets. That's why some analysts call RWA the Trojan horse of DeFi. It brings traditional capital into the decentralized world. Quietly, efficiently, and irreversibly. For investors, RWA represents a profound shift in time horizon. This is not a market for quick flips or speculative pumps. It's a market of slow, steady growth, where returns come from yield, not hype. It aligns perfectly with the philosophy of long-term structural investing, the mindset that wins not by chasing volatility, but by owning infrastructure. From a philosophical perspective, RWA represents a reconciliation between two ideologies that once seemed opposed. Crypto was born out of rebellion, to build a system free from banks and governments. TradFi was built on control, to ensure stability through centralization. RWA brings these two together, not as enemies, but as collaborators in a more efficient system. It's not about destroying the old world, it's about upgrading it with transparency. In the long term, the tokenization of real-world assets will extend beyond finance. Intellectual property, carbon credits, energy markets, supply chains, every system that relies on trust and record-keeping can benefit from blockchain integration. When everything from real estate to renewable energy is tokenized, value itself becomes programmable. At that point, the phrase crypto market will disappear, because all markets will be crypto native. So when you hear RWA, don't think of it as another sector. Think of it as the bridge between stories and systems, between speculation and structure, between the Internet of Information and the Internet of Value. It's where blockchain stops being an idea and starts becoming infrastructure. This is the whale flow, where we study how value moves between worlds, where logic replaces noise, and where those who understand the bridges being built today will be the ones who control the flow of capital tomorrow.